Let's take a look here as we look at our 60-minute chart of the S&P 500, with the gray area that you see being the overnight trading, and the white area is of the actual pit trading. Of course, there was trading there on Monday on the futures, but that was Memorial Day, so the markets were closed. As far as the futures go, there was a big relief rally on Sunday night, as the Italian president rejected that Eurosceptic finance minister, and the new prime minister resigned. The relief really was gone, though, after just a little bit of time on the potential for a referendum in Italy, which now, of course, doesn't look like it will happen, and that the dollar got a jump, and the euro absolutely slumped on that news. That set up a decline that lasted up until Tuesday. Markets of course, did nothing on Monday, as you see that on the holiday. But then on Tuesday, it really seemed like the euro crisis was back. The Eurozone markets moving sharply to the downside. The euro moves as low as 115.90, down around 1.25% on the day, and the dollar jumps. That breaks the market right over here on Tuesday overnight, as those fears certainly came in, and they really came in then when the market opened, as then President Trump said that he was going to impose tariffs on 1,300 items. They were compiling that list, and sometime by mid-June that's likely to come out. That's why I warn you that between now and June that we're going to hear more on tariffs that could rattle the markets. And the 30-year exploded that day, up about 2.5 points. It was a huge day for the bond market, the biggest we've seen in a long time. Wednesday we saw relief here in Italy, and we got a minor bounce in the Eurozone. You can see that helped the markets come back, and very much, as you can see, we had a zigzag week here. Tuesday down, Wednesday up, Thursday down, and then Friday up. That's really what's going on here. So the Eurozone rebounded, bonds backed off, small caps jumped, with the Russell up 25 points. I mean, these are some big gains we're seeing in these small cap stocks. Then we get these tariffs imposed on steel and aluminum, and then the market breaks again. And the Eurozone leaders, they have threatened retaliation, and you can be pretty sure that there is going to be something coming out. Then on Friday in the morning, middle of the night, Italy was able to form their government, the populist government that right now says they're not anti-euro, but I think they're going to end up being anti-euro. And then the market took off as the payroll numbers came out much stronger than expected. 223,000 payrolls, new jobs created, and the last 2 months were upgraded also. U3 falls to 3.8%, the best since 2018 years, and then you have to go back way into the 60s to find a lower unemployment rate. Boy, the Fed has got problems when it comes to that. Wage gains were strong, and that was, something to be concerned about, and that's why the bonds backed off about 1.5 points to the downside. So here we are, just past the midday mark, about 2.5 hours to go on Friday, and you can see the market has basically not had a downtick. It really, well, there was a moment of a downtick there, which I was looking for news. There was nothing I could see, and basically you can see all these white 60-minute bars as it just continues to storm to the upside. Got to wonder whether they can do this right through the close, as of course some fear of something could happen over the weekend might disturb the market by just a little bit, but you could see that is a very strong looking market that we have today, as it is now trading on the highs for the week. So markets doing pretty well now, and Friday is really the day that saved them. Our projection for the stock market has been that we were going to be in a correction into late May. In other words, the correction which started in January, which came as we expected, would continue, and that outside of some upward chop, and this upward chop has been stronger than we expected, that we would then move to the downside again to complete the pattern into mid-June to potentially mid-July. So that influences us because the dominant patterns are suggesting that there would be downside moves. Now we have the low cap stocks just screaming to the upside, and that has lifted the market up in here, benefiting from the tax plan. So our downside objectives are higher than they were before. And I said in the beginning of the show, some 4 to 6% decline is what we're looking for in here, which is not very much whatsoever. That should be a regular occurrence in the stock market. So we're going to look at the S&P 500 SPX. We said last week it would dip down to about 2682 or lower. We said that the previous week also, and it resisted that, and that's what it did this week, and then rebounded very strongly after that. We have a repeating cyclical pattern, of course, that we look at that gives us information when we look at the S&P 500. You could see these cycles on the bottom. The ones I want to focus in are what are the minor cycle or the half cycles right in here, and those are running 13, 14 days. You can see the minor cycle right in here. That's set at a 14-day period, and you can see right in here this was a 13-day with almost no decline, and then a 14-day right in here. This was a clear 14-day here that you see that, and this was similar. It was an oddball double low right over there because you had that break at that point, but it was a false break as it came right back. So these cycles right there, the 14-day right over there gets down into that support zone, breaking that 2682 number, and then pops back up. You're in now this rally and likely to be turning over again right in here, and this is your first high period of risk, this period that takes you out into mid-June right over here. This high period of risk, then once we get past there, you'd likely get a rally if the decline comes as we assume, and then you would have the potential of another decline way out over here. Again, I'm giving you a little bigger picture out into mid-July. That's the date there, July 16th. So we're in this period right over here that brings you declines. You want me to prove that to you? See the nested low here where the two cycles are coming down? Look at the amount of decline right over there. You see the nested cycles here where the two of them are coming down? Look at the size of the decline here. So these declines right over here were from 2803 down to 2553, a 250-point break. This decline right over here, as we get a narrowing within a triangular shape, takes you from 2718 down over here to 2593, a 125-point drop. That's why I'm calling for a 100 to 125-point drop right in here over these next couple of weeks. The VTL is coming in right over here at 2642. That's a key area. There's also another support on the intermediate at 2606. So those are targets for us right in here, and we think we're entering into this period of high risk, that this rally that we're in is likely to fail. It's the last 3 or 4 days in that lift. Maybe it has a few more days to it. If you look at this one over here, you could see the break and then the rally back up to test the highs. That lasted for 6 days. So the break, the rally up to test that high, we're now 3 or 4 days into it. Maybe you get another couple days, but then you roll over right in here. So I'm breaking down the analysis for you to see why I believe that there is a strong declining window of time right in here in these next couple weeks. So we'll see if it works. If we blast out over these highs in here, then the pattern is definitely better than I had anticipated, and it's going to take some work for me to figure that out. But right now I'm sharing with you the highest probabilities I see, and that is that the market moves down in a sharp way. I would rate that at some 70% or higher based on these patterns, these configurations in here, and that's what we're going to look for, 2642 to 2606 in the next 2 weeks, starting sometime middle of, early to middle part of the coming week, maybe Tuesday or Wednesday, is when we think you could get the greatest acceleration. Don't forget, follow me on Twitter at AskSlim. Become a subscriber on our YouTube channel. You want our half price month to try any of our levels, our videos level 2, our setups and rankings and videos level 3, or our charts and all of the rest of our content. Don't forget about the stock index report for 19 bucks a month. Just unbelievable amount of information. I'm going to sit and I'm going to